So let's pull up the intraday chart for the Nifty 50 because you're seeing quite a big crack for the benchmark at this juncture, down about 0.75% at this point, and you see there's a falling off of a cliff almost in the benchmark Nifty 50 just over the last half an hour or so. And pull up the Nifty Bank because that is where you're seeing most of the pressure in terms of the selling. And you see the Bank Nifty that's down about 1.2%, having fallen about 1,000 points or thereabouts from the high point of the day. I'm just looking at the screen and taking a look at most sectoral indices which are down. In fact, the Bank Nifty down about 1.7% from the high point of the day, and you see much more red on the screen than you saw even slightly earlier on in the session. In fact, 11:30 when we spoke about this, the market breadth was tilted in favor of the advances, and I would not be surprised if that has changed entirely. And there you go, there's a complete inversion of what you saw at the start of this session, and you see more declines than gainers right now. 24,000 broken on the Nifty 50. We are still trading above the 200-day moving average, which stands at 23,500 for the Nifty 50. So we're currently just about 460 points above that 200-day moving average, but considerable pressure on the Nifty 50 as we speak right now. I'm taking a look at some of the constituents on the Nifty 50, and you have now about 39 stocks on the benchmark Nifty 50 that are losing ground. Britannia, on the back of its results, losing further ground today, down a further 6%. It was under pressure in trade yesterday as well. Another stock, Asian Paints, which is once again on the back of earnings declining. You saw the management speak to NDTV Profit earlier. The company under significant pressure in terms of the contraction in margins, pricing pressure in the space, not boding well for the earnings for this company. Let's pull up the weekly chart for Asian Paints because that will just give you a sense of the kind of selling pressure that you witnessed in the recent past, and that seems to be exacerbated. 14% over the course of just a week. HDFC Bank, earlier on in the session, in fact, you had just about a flat move or marginally negative move for HDFC Bank. It is now down about 2.5%. I believe we're now joined by Dilip Bhat. Dilip, thanks so much for taking the time. Can you give us a sense as to what is leading to this sudden drop that we're seeing? We were more or less range bound in a very narrow range earlier on in the session that is broken completely.
Good afternoon. I think what we can just, interpret for this entire, the way the markets are behaving and the way it has come off, I think this kind of sharp falls are bound to be a part of this particular market for some more time to come. I think, what I mean is not just the fall, it will remain volatile. There can be a sharp correction on some of the days. But the point still remains that how do you deal with such a big sell-off by the FIIs? And most important is, I think too many negative factors now being harped upon in such a big way at the moment in the market, whether it is slowdown, whether it is a rupee fall, whether it is inflation. I think muted guidance by most of the management in their commentaries post the second quarterly results. And of course, the second quarterly results has been a kind of a washout. So we are heading for some kind of Nifty downgrade even for next year. Though sometime back, about 1 month back, it was almost at 15% growth in Nifty EPS for FY26. But I'm sure that also will see a correction. So I think I think these are the things which are just playing out. So our own sense is that yes, markets after a sustained rise for such a long time are behaving exactly the opposite. And I think one should look upon it as a correction which is healthy, which is required, and maybe it will give us an opportunity in the times to come.
I believe we're also, let me confirm, do we have Rahul Sharma, who's Director and Head of Research at JM Financial on the phone joining us as well? Okay, we will soon. Dilip, I'm just curious what you say. So I take the point that you've made about opportunities to be found, but really even based on the data that we saw for the mutual fund industry last month, and that came out yesterday, in the month of October also, retail investors have continued to invest. If anything, the lump sum investments have actually gone up. So you have domestic institutions that have so far been able to form a little bit of a base. How long that continues is another question. So one, do you think that that confidence will remain in the month of November, or do you think that you will see some cracks there? And the second, you've seen quite a bit of the earnings season so far. Are you of the opinion that there have been more disappointments than you would have liked?
Taking your second point up, without any doubt, I think some of the big caps have certainly not been up to the mark, and their profits have been pretty bad as compared to the estimates. But even if you were to leave that aside, what I find is the management commentary in the quarterly, in the second quarter of quite a few companies which we have heard, they don't seem to be talking about any great upturn in the next 2 months or in the next 2 quarters too. So I think that is the more worrying part, that the slowdown in the economy, which is what is compounding the matters at the moment. Now, how to play that scenario? Because markets, even at this level, is not cheap. Because if you see a EPS downgrade, even after this correction, markets will still continue to look exorbitantly expensive, without any doubt. And more so if you were to narrow down to a few companies. So I would say that as far as the companies have been concerned, people will still would like to wait for the positive comments. They may not wait the completely. And I think as far as your question about the DIs and the retailers supporting, yeah, I think that has been the best part about this market. But then, when this kind of a distribution happens to the retailers and to the DIIs, I think in a way the market will take a much longer time to take away, take care of this liquidity which has now come into the market.
I have a question for you then. I have a question for you. What I'm trying to get at is, you mentioned there is a possibility of EPS cuts, but then based on your reading of the earnings so far, in which pockets do you anticipate that will take place, and will that have a further knock-on effect going forward?
So that's what I said. I said that apart from the fact that this second quarterly results were not all that great, the management guidance didn't do anything to improve that. So it really implies that the next 2 quarters, we will take it as a corollary that it is going to be, the way they spoke has not given a great comfort. So I would say that even next year's 15% EPS growth, which we are factoring about say a month back, remains very vulnerable. So I would say that yes, if EPS is to be downgraded further from the current level, then the valuations don't look all that cheap, even after such a big correction.
So Rahul Sharma, Director and Head of Research at JM Financial, joining in. Rahul, we were just speaking about the kind of crack that we've suddenly seen in the equity markets, and we were talking about some of the fundamental factors that could be driving it. Of course, you're seeing tremendous selling by foreign institutional investors, but we were wondering whether or not some part of this is also fueled by more disappointments than anticipated in the earnings so far. What's your view?
Yes, absolutely. So the earnings so far have been a mixed bag, and wherever there has been missed estimates, markets have not been kind, and we've seen the kind of carnage that has happened over the last few weeks. Now, the question on everybody's mind is, do we take support over here, or is this kind of a area where we break down? So 23,800 on the Nifty is a very crucial technical level. We've bounced back from there. It is also a Fibonacci retracement of the entire previous bullish move that we've seen. So our sense is, as long as this level is not breached, it will be a period where the market does this back and forth action. We've seen volatility around the 24,000 mark over the last 1 week or so, and once this 23,800 breaks, that would open gates for further downside towards 23,500, 23,300 as well. So the best thing to do as a trader is follow these levels And once these levels get violated, just take the trade and ride the wave that we are into. So clearly, it is the Nifty which is seeing some pressure. Now, one silver lining that we have is the Nifty 500 index, which is representative of the broader market. This index has still not broken the budget day low. So budget day was on 23rd July. The index is still trading above that, and in fact, this is relatively outperforming. There's a divergence which is building. But our estimators, if Nifty manages to break the 23,800 mark, even the broader market could feel the heat, could feel the pressure, and we may go down further on the small caps and mid caps as well. So the overall sense is, it's a make or break kind of an area for the market. If it violates, the best thing to do is look to buy 23,500 puts of the monthly expiry as a hedging strategy going into the rest of this month.
That's a trading strategy and well taken, Rahul, at this juncture. I'm sure a lot of traders will appreciate that. I'm also asking specifically on the earnings, right? Because just over the last couple of days, we've seen a few large companies. Asian Paints was one. You had Britannia also that disappointed. Is your house essentially taking some calls to downgrade? What are the views that you have post this? Will you also have EPS downgrades that you're taking, and which pockets do you anticipate that will take place in?
I had a contraction in the earnings after a good 3.5 year kind of a period, and this is something which probably the markets was anticipating, which is why we saw the big sell numbers from the FIs to begin with. Now, we are seeing this as more as a transitionary phase. We feel that things should normalize. The RBI has got a lot of arsenal to play around with the interest rates, and they have a lot of room for sure. So that would is something that they would try to revive the economy. But having said that, I think after good 11 months of month-on-month returns on the Nifty, we are finally seeing a second month in a drought where Nifty is giving negative returns. So this is something which is more or less kind of a pullback in nature, and we feel that if you have a slightly medium to long-term outlook, this is a good opportunity to enter into quality setups, quality businesses where we feel that the long-term story is still intact.
Okay, I do want to ask the both of you this, and I'll come to you first, Dilip. Rahul, do stay with us. I have one more question for you. Dilip, just taking on from what Rahul was saying, if you zoom out and if you have a longer-term time frame, would you use this opportunity to start taking or start accumulating any stocks that you might hold in your long-term portfolio, or would you wait a little bit for the dust to settle? If the answer is yes, accumulate, then where would you be looking? Okay, I'm not sure if we have Dilip still on the phone line, but Rahul, I'll come to you on this one then. Would the answer be yes, accumulate, and if so, where would you find comfort?
Yeah, so the answer would be yes, and so far we've seen relative outperformance happening in two sectors. So one is the IT, where we feel that the sector has reversed just in the last quarter, and there are long legs to it. Second is the PSU banking pack, where we've seen the results have been good, especially for the big names like SBI, and we feel the risk reward is very favorable in this space. So these are two areas, two sectors where we are keeping an eye on. If you're playing the IT basket, the best thing to do is do a diversified approach, 2 large cap IT names and 2 from the mid cap. And if you're doing the PSU banking pack, the best thing to do is either go for the PSU Bank Bs, which is the ETF, or simply stick to the sector leader, which is State Bank of India.
Just a follow up then, you have a few frontline companies that people have had a lot of patience with, the likes of Asian Paints in particular, and we've had a lot of people ask us this, Rahul, as well. So it's an important question to ask. If somebody has been holding for a very long time, and we're seeing consistent pressure in a stock, when do you bite the bullet and say, I'm likely going to find better returns elsewhere?
Yeah, so, the kind of underperformance that some of these stocks have had, even in a bull market, it was something which was, questionable. And at the same time, now that, we are actually realizing the numbers on the quarterly front, things are not looking that great. So the best thing to do is, limit your losses, probably look at the relatively, better names that we've just discussed. And having said that, this is that kind of a market, at least over the next 1 quarter or so, where the markets will be pretty ruthless when it comes to earnings disappointment. So the best thing to do is, shift sectors. Wherever there is disappointment, the best thing to do is get out of them. And, the sooner you bite the bullet, the better it is.